So this in effect could impact all 1040 taxpayers. In this video, we're going to cover one of what we considered top 10 takeaways from the new CAA law, which was the Consolidated Appropriations Act that happened in December of 2020. And one of those items was what we call the enhanced charitable contribution. And this is actually impacting people that don't itemize and people that do itemize. So this in effect could impact all 1040 taxpayers. So the first thing is, let's talk, Debbie, about the above the line, the 300, 600, and the clarification in this act. And then secondly, we will talk about the expansion of the 100% cash contributions if you itemize.
If you don't itemize, under the CARES Act, they already said that we could take a $300 deduction for contributions made to an actual not-for-profit charitable organization. And there was a lot of questions surrounding whether that was $300 for single people and married filing joint, or if it was $300 per person. So the CAA Act, is it a CAA Act, has actually clarified that it is $300 for individuals, $600 for married filing joint. So we do know that. We also know that it has to be in some sort of cash, check, debit card, credit card. It cannot be material items. So if you take stuff to Goodwill and it's worth $300, that does not qualify. So it actually has to be a monetary value.
And I think that's the good point. It has to be monetary. The other thing, just like any other law, it's not just, well, I gave $600. It's called, I have certain documentation to do. So a good example of that would be somebody that gives, that gives $20 a week at church. Well, each one of those events is $20. That one, you just have to have some kind of documentation to support it. But if somebody says, well, $600, my spouse and I gave $600 to the church or $600 to a fundraiser. At that point in time, you have to comply with the current law. And anytime there's a contribution, this has been around for years, in cash of over $250 at one time, then you have certain documentation. You have to get a receipt to the amount. Also, the receipt is required. You have to get it at the time of the contribution or before filing a tax return. So it's not just, well, I gave as an individual $300 or I gave the $600 as a married couple, but how did I give it? So that documentation is important. Again, if any one contribution, whether it's above the line or here in a moment in our video we're going to do below the line, either way, that has to be documented because of being over 250 in one contribution. So a very important point, we want you to get, if you're giving these donations, it's important to give it. Also, it has to be to a qualified charity. And again, that's not in the new law. That's already been around. So it has to be a qualified charity, like a church, certain 501c3 non-for-profits. So it's not just, well, I gave it. It still has to meet the same requirements of documentation, the same requirements of a qualified charity that it would if we itemized and went long form. So I think with that kind of wraps, again, this new law clarified that, yes, $300 for an individual, which means if it's a married couple, we get $600. So now let's go to the second area that this bill impacted on charitable giving. And the CARES Act said that instead of having the 60% of AGI limitation, now we're moving down, if you file the Schedule A, you're itemizing. Some people refer it to as the long form. So I'm itemizing. I'm taking my home mortgage, my taxes, my medical, and all that. Well, what this does is a taxpayer can give up to 100% of their AGI for the year 2020. That was the old law under the CARES Act. But under this new CAA, Consolidated Appropriation Act, in there, what they have done is that they've actually expanded this for individuals, and later on we'll cover corporations, but they've expanded this to where it can be 100% for 2020 and also 100% for
2021.
2021. So in the tax planning, It allows people, if they gave too much in 2020, it carries over into 2021, they can still take 100%. So that's also good news, because what it was under the CARES, again, it was 100% for 2020 and that year only. Now it's 100% for 2020 and 2021. And if you're a corporation, a C Corp, this rule, you can give up to 25% of your gross, of your adjusted gross income for 2020 and 2021. The question may arise also about the flow-through entities, the S Corp or the S Corp LLC, or the partnership or the partnership LLC. And again, there we go back to old law. And I think the Act also clarified it's a flow-through. So the limitation on those two are at the individual level. It will flow through, and it will either be the same effect. So in that case, if I'm doing a business return, a flow-through entity, the S Corp or partnership, and I'm doing it for myself, remember, I can still flow through that 300 or 600 per person, or I can flow through the itemized deduction. But that will apply, again, at the 1040 level. It's a separately stated item. So again, in this video, we hope this helps. We're explaining one of our top 10 areas we believe of the new law. So please subscribe to get the other videos, or go to our video page, AGC Solutions. Hope this helps. Have a great day, and
have a great day.
Thank you.